So it would appear Pierre Poilievre has learned nothing. Since winning his by-election, he has doubled down on the same negative rhetoric that saw him fumble the most winnable election ever. It really frustrates me because this country is crying out for a great opposition party right now. Here's the latest. Pierre Poilievre shared this article from the Telegraph a few days ago. The Telegraph is a British newspaper. Here's a quote from that article referencing the years Mark Carney spent as the governor of the Bank of England. It says here, the years Carney spent running the Bank of England were characterized by stagnant growth, stalled living standards, and declining productivity. This article was from March 10th, 2025. Poilievre dug it up and put out this quote on his Instagram. He then added this caption: Mr. Carney gave Britain stagnant growth, stalled living standards, and declining productivity. What does Canada have now under his watch? Yep, stagnant growth, stalled living standards, and declining productivity. Okay, so let's talk about that. Mark Carney was the governor of the Bank of England between 2013 and 2020. From 2013 to 2019, UK growth averaged about 2% a year. That's already slower than the UK's long-term post-war average of more than 3%. So that part of the claim is correct. By early 2020, growth had flatlined at 0% in Q4 of 2019, leaving the economy vulnerable when the pandemic hit. The pandemic then dragged the GDP down by nearly 10%, which pulled the whole 2013 to 2020 average to less than 1% a year. In other words, even before COVID, the Carney years were weaker than the UK's historical norm. And the crisis at the end makes the overall record look even worse. Productivity per worker barely grew, and the UK was stuck in what economists call a lost decade. The lost decade was between 2010 and 2020, which overlapped with Carney's time as the Bank of England governor. Speaking of stalled living standards, real household incomes inched up only slightly, and child poverty rose from 27% to 31%. While Carney was Bank of England governor. After the 2016 Brexit referendum, UK business investment grew only 1.25% versus 12% across the rest of the G7. Okay? So it was pretty bad, right? That part is true. But what is my point in all this? Yes, Mark Carney's time as Bank of England governor was characterized by stagnant growth, stalled living standards, and declining productivity. But you will see very soon why you need to be extremely vigilant so you don't get taken in by the half-truths politicians tell. Think about this for a second. What does the Bank of England governor do? What does any governor of any central bank do? What powers did Mark Carney have that could have solved Britain's stagnant growth, stalled living standards, and declining productivity? Just think about that for a second, okay? Let's take these one by one. Let's start with the declining productivity. You should probably know that the UK productivity growth had been stagnating from the 2008 financial crisis. However, it was even worse under Carney. And what caused that? Low business investment, weak infrastructure, and skills gap in the workforce. That's what caused that. But here's the fundamental caveat, right? Productivity is a structural problem. It is driven by government policy, education, and private sector incentives. It is not driven by the Bank of England policies. Monetary easing doesn't make workers more productive or factories more efficient. So a decline in productivity in the UK is not Mark Carney's fault. I'm just saying. Let's take the next one, stalled living standards. People can buy bacon, I guess. Well, sure. Carney could influence borrowing costs to stimulate spending, but it was not his job to raise wages or change tax policy or increase social benefits. These are set by the government. But what about the stalled growth? Surely Carney had the power to fix that. Well, think about it. There was a global slowdown in trade and manufacturing between 2018 and 2019. Guess which of your favorite politicians was at the center of that shitstorm at the time? Yeah, you guessed it. The UK is very trade dependent. Exports are about 30% of GDP. And at that time, weak global demand directly slowed UK output. Carney could lower interest rates or do quantitative easing, but that only affects domestic conditions. He could not stimulate foreign demand or undo global trade tensions, such as the US-China trade war. Also, Brexit. Carney was actually accused of politicizing the Bank of England because he spoke against Brexit. Well, Brexit had consequences that impacted the British economy. Now, people might say, well, Brexit didn't actually happen till 2020. Well, the referendum was actually in 2016. And you've got to realize that investments are always based on expectations of the future. If you expect uncertainty in the future, why would you invest your money in the UK? In fact, major auto manufacturers like Nissan and BMW publicly delayed UK investment decisions until Brexit clarity emerged. And this is why you need to be very careful with politicians and their half-truths. You know something sneaky that the Telegraph did in their article? They said there, the years Carney spent running the Bank of England were characterized by stagnant growth, stalled living standards, and declining productivity. Characterized is really the key word there. So essentially, they were saying these things happened while Carney was Bank of England governor. They actually did not say he was responsible for the problems. Note the sneaky language there. But let's go even deeper. How did Mark Carney actually do on the things he did have control over? That would be the ultimate test of whether he failed or not, right? So one of the big tools any central bank, certainly the Bank of England, has under its control is interest rates, right? Carney inherited a base rate of 0.5% in 2013 after the financial crisis. He cut it further to 0.25% after the Brexit vote in 2016 and used forward guidance to signal that the rates would stay low for a long time. In doing so, he stabilized borrowing costs and kept mortgages manageable. This also encouraged some consumer spending, though businesses remained cautious due to Brexit. So he managed rates as effectively as possible given the problems at the time, and there simply wasn't that much room to cut even further, right? The other tool central banks have at their disposal is quantitative easing. Quantitative easing is a form of monetary policy used by central banks to increase the money supply and stimulate the economy. This is where that accusation that Carney printed too much money during his time as Bank of England governor comes from. The idea was that all that printing money was inflationary. The reality of it is that inflation remained around 1.4% in late 2019, well below the 2% target, showing that Carney's printing money did not actually create runaway inflation. If Carney had not done the things he did, the UK economy would likely have faced sharper declines in investment, lending, and growth, especially post-Brexit uncertainty. But here's the third thing Carney had control over. Carney also oversaw rules on bank lending and mortgage safety via the Financial Policy Committee. This prevented excessive risk-taking in housing and banking. It also kept the financial system stable, which is very important during global uncertainty. So he did his job. No banking crisis occurred under Mark Carney's watch as the Bank of England governor. And that is important here. Using the tools Mark Carney had control over, he actually did his job largely successfully. Let me take you even deeper. I'm going to compare Mark Carney's term with two other Bank of England governors. Sir Mervyn King was Bank of England governor between 2003 and 2013, so right before Carney. He handled the 2008 global financial crisis. Carney was still at the Bank of Canada. Also, we will compare Mark Carney's term to Andrew Bailey's term. Andrew Bailey started his term right after Mark Carney left in 2020 and is the current Bank of England governor. So let's start with Sir Mervyn King. The context I want to share here is the global financial crisis of 2008. Sir Mervyn King was initially cautious during the crisis. He was reluctant to inject liquidity early on. He was worried bailouts could encourage reckless behavior. In fact, in retrospect, Sir Mervyn King was criticized for his slow response to the crisis. But how did the economy do while Sir Mervyn King was the governor of the Bank of England? Well, inflation peaked at 5.2% under him. You will recall it remained mostly near the 2% target for Mark Carney. GDP was pretty volatile as well and averaged around 1.5%. So not great. He cut rates aggressively from 5.75% to 0.5%. But as I said, he was criticized for being slow to act. Now let's see Andrew Bailey. Andrew Bailey dealt with the COVID-19 pandemic, the inflation surge that followed, and labor market challenges. He chose emergency rate cuts during the pandemic. He focused on productivity. However, he struggled with inflation control. Inflation peaked around 11.1% in 2022. The UK had the highest inflation rate in the G7. Thankfully, now it is under 4%. Average GDP growth was around 0.5% due to pandemic drag. Interest rates went up from 0.1% to 5.25%. Andrew Bailey was criticized for inflation persistence. Look, if I was being fair, Andrew Bailey has faced some uniquely turbulent times, but facts are facts. So if we focus strictly on bank-controlled levers like interest rates, inflation, crisis response, Mark Carney arguably delivered the most balanced performance of these three. He kept inflation near target, he responded decisively to Brexit, and modernized the bank's communication and policy tools. And that is the nuance that a lot of people will miss when they just read the headlines and don't do any research. And Poilievre frustrates me because he does this all the damn time. Like, he is addicted to the shock and awe. As I said, it is frustrating because this country is crying out for a real opposition to what the Liberals are offering, and Poilievre could be that opposition. But I fear he will continue to make himself more and more unlikable with this approach of his. Anyways, you guys let me know in the comments. Do you feel Pierre Poilievre should continue with this approach? And if he does, can you still see him becoming Prime Minister of Canada? Would you vote for this version of Pierre Poilievre? Get in the comments and please subscribe on your way out. I appreciate you. I'll see you next time.